All right, everybody, this is John. Welcome to the free video. Let's talk a little bit of earnings. We'll talk a little bit of Tesla. So if you're newer to options, and so here's Intuit. They had earnings. They closed at 361, and after hours, they did a great earnings report, and they're down like $1, right? And then WDAY, which has been a high flyer, closed at 230 bucks and is down about $6 after earnings. So why is that a big deal? Well, for WDAY, the expected move was about $13, meaning that the options were pricing in a $13 move to the upside or a $13 move to the downside. Since right now it's only down about $6, give or take, and of course I know it could be different by the time the bell opens, that means anybody who sold options is going to make money. Anybody who bought a call hoping that it would explode higher is going to get destroyed. That's called IV crush. What that means is that the implied volatility, which is 117%, tomorrow morning after about the first 5 minutes will revert back to the mean, which is about 46%. So all the premium in these options will get destroyed, and that's great if you sell them. I love doing earnings on Thursday because Friday morning there's not a lot of time left, and the implied volatility truly evaporates. Whereas, if there's earnings Monday, the implied volatility will drop a little bit, but you still got the rest of the week, and so you don't get the same bang for your buck. And then I was going to say the other one's WDAY, but the other one was Intuit. And so same thing here. In this case, we just did an iron condor outside of the expected move. So we closed at 361, sold the 375 call credit spread, the 345 put credit spread for $1.17, which isn't a lot, but it was a super high probability play. And of course, if we open in between that and close in between that, we get to keep the entire credit. There's always the danger that it could take off and it could fall to the downside. And it's always kind of funny when people say, well, what happens if it does this? Well, it's called trading. You man up or woman up and you deal with it. At this point, it looks like it'll be okay, and we'll know a lot more in the morning. Tesla. So one of the things here with Tesla, of course, is that it is back in play. And of course, as you guys know, I really enjoy trading Tesla. I am the first one to say I am late to this party. But I do want to point out a few things here. So we were down here hanging out. Didn't look too hot, and then of course there was the announcement of the inclusion to the S&P 500. We pulled back. I was hoping to buy it here. I missed it. It popped up again. I was hoping to buy it here. I missed it. So I did pick it up today on a little bit of a pullback. My expectation here, and I did go out to December, is that we're going to at least take out the overnight high that was made the day of the stock split. So we did make new cash session highs today, but the overnight high is 538.75, and I do think this will be a magnet. I don't know. I know it probably needs a couple of days to rest here, but I do think that it'll be a magnet and get taken out at least by the time it gets included into the S&P 500, if not before. Okay, that's what I got. You guys have a fantastic evening. Remember, next week is Thanksgiving. If you are outside of the U.S., that means the U.S. markets are closed on Thursday all day and then a half day on Friday. I think. I'm pretty sure it's a half day on Friday. And then, so trading is typically pretty slow. And then, so otherwise, you guys have a fantastic rest of the week, and we'll see you at the next update.